What is going on, Alpha Hunters? It is a very marvelous Monday. Hopefully, you had a very marvelous weekend to all you veterans out there. Hopefully, you have a very marvelous day of reflection and remembrance for your time in service and those that you served with. Alrighty, let's see what's going on across the markets today. We have a nice little move higher on the markets. Not crazy, but a little bit of a move higher on the SPY at least. Up currently about 0.25%, which is about where we gapped up to. You can kind of see right where we are. So that's about where we gapped up to, is about where we are right now in the markets. Other than that, we saw a little bit of a pullback there in the first 45 minutes and push higher here over the past 45 minutes. Okay. Qs did have a little bit of a gap up here, and it got wrecked. Not wrecked, but nice little quarter-percent gap up there. But it did trade down roughly about 0.5%, a little bit over 0.5%. Hasn't quite bounced. So there you go. See some profit taken in the tech area. IWM, if it loads. There we go. So the IWM had a very nice gap up today as well. Gapped up about 1%. Nice. Pushed a little bit higher, a little bit of a pullback into that 5 EMA on a 5-minute time frame. And then it has pushed higher here over the past 45 minutes, looking pretty good. So there you go. IWM currently up 1.4%. DIA, nice gap up. Nice trade higher there for the first 30 minutes. Currently up 0.9%. RSP also had a pretty good gap up there. Currently up 0.8%. You can see it just kind of trickling higher throughout the day. So that is how things are starting off for the week. As far as the RSP, looks pretty good, continuing higher. I would rather just be waiting, even though there's a lot of optimism, post-election, all that kind of stuff. I'd rather just wait. I'd rather just wait. DIA continuing higher, looking pretty solid there. IWM finally, man, got that new all-time high close on Friday after, it closed Wednesday, Thursday, Friday higher, but got a weekly close on Friday. New all-time high. So, yep, looking pretty good. A lot of people probably saying, oh, yeah, here we go. IWM on the run. Makes sense. Hasn't hit all-time highs for a couple of years. Qs lagging behind. Outside of Thursday of last week was kind of lagging every day. So, Qs currently flat on the day, not really doing a whole lot. And SPY, you can see SPY's not doing a whole lot. I mean, outside of that gap up, it's a small day there on the SPY and SP 500. So we'll see how it goes the rest of the day. But I think you're going to have plenty of time just to wait. Even if you do like this recent price action, which there's probably plenty to like about it, you probably easily looking for a pullback into some of these previous highs that we had throughout October. So there you go. And over that, we're just going to see how things go. Probably just more of continuing to watch flows across the market. And was my log not on? There we go. The VIX, VIX, a little bit of a gap up there. Start the week on Monday. Okay. Yeah, not really too much to say right now. It hasn't gotten below the low that we put in back in August. It was close, but it hasn't taken that out yet. So we'll kind of just watch that. DXY, dollar index, continuing to push higher. Okay. The pro dollar move, continuing to push higher. So there you go. Took out the highs of last week. So it's looking like it's going to continue. Oh, man. What a drop off here on gold. All right. I think you're probably easily looking for this play. Probably down to like 233, 234, like 235-ish. It's a pretty good gap down today there on the GLD Gold Trust. It's been running pretty good. I still don't want to play it bearish too much. I'd rather just be looking for really solid dips. I think we're probably going to be looking for a really good consolidation basing here. Probably as we go into the end of the year, maybe beginning of next year. I don't think you're gonna really be worrying about really solid gold moves now. That's a pretty good breakdown. So last time we actually broke down the 50, it's back here in July. We had a multi-month kind of consolidation, and we did gap down one day back in July, and we gapped right back up. So if we get maybe a gap back up, we don't really have a multi-month consolidation here, so I wouldn't really be looking for that. But it's a pretty good breakdown. Even if the dollar just kind of rests and doesn't put pressure on gold. I mean, gold might have just broken some technical trends. 10-year yield not doing much of anything. Okay, interesting. Let's see. 2-year, 2-year kind of not doing much of anything. So 30-year not doing much of anything. Wonder what's going on there. Could be certain parts of the market are not really that active, or maybe even open due to Veterans Day, even though the stock market's open. Curious. Anyways, 10-2 inversion yet, not doing a whole lot there either. So HYG, the high yield corporate bonds, kind of flat, not doing a whole lot there. Okay. LQD, nice little pullback here on the LQD. One thing that you can kind of spot right here is some of these previous highs that we've had over the past couple of weeks. You could say we kind of broke out there on Friday, a little bit of a pullback right into that spot. Maybe look to take that bullish. Maybe not the worst idea ever. Anyways, LQD, subtle little consolidation spot. TLT, yeah, it didn't get above these highs that we put in over the previous couple of weeks. Kind of got a little bit of a pullback today. With how much yields are not really doing anything today, that we just looked at, I'd say I wouldn't be trying to do anything here with bonds. So it's just kind of my perspective, I guess. As far as what the heck? Why are all these? I really hate it when they do like auto clean stuff. Oh, all right. As far as sector rotation for the start of the week, we got tech big laggers. Kind of makes sense, right? We saw the Qs not performing all that well. Healthcare also underperforming. Materials, staples underperforming there a little bit. A little bit of outperformance. Energies kind of in line with the market there, I guess. Real estate also kind of in line with the market. Communications and utilities slightly outperforming. Industrials, financials doing pretty good. And discretionaries doing pretty solid there for the start of the week. Okay. All right. Probably has TSLA on the move, I guess. As far as how intraday price action is going, you can see tech really kind of lagging behind there. And then got materials also underperforming. Healthcare, industrials, slight outperformance. Staples, real estate, communications, energies kind of all clustered in there. And you got financials and discretionaries at the higher end of the day. So there you go. All right. Let's see. Good grief. Stop. Thank you. Good grief. TSLA. Yep. Tesla popping. There you go. Oh, man. Tesla's up 10%. Goodness. So, yeah, if you didn't hear, Elon Musk apparently was on a call with European leaders. I think mostly probably Ukraine and maybe Russia, along with President-elect Trump. And obviously that probably is spilling over some of the positivity to TSLA, Elon Musk and stuff like that. So that might be part of it. You can see what Tesla shares dropped post-election. hitting 1 trillion market cap, back in the 1 trillion area. Last time I did that a couple years ago, I mean, kind of had a pretty good pullback over the past couple of years. Indicating they got upgraded, outperform, indicating strong optimism about Tesla's future performance. I wonder why. If he's gonna be, if Elon Musk is gonna be part of, Trump's administration, probably has less regulations maybe coming down the line. So, yeah, there you go. Anyways, last week, big time performance. Probably want to stay in on that. Wells Fargo, a lot of financials doing good again. Yeah, JP Morgan last Wednesday had a crazy awesome day. AbbVie. Interesting. So AbbVie's schizophrenia pain is Bristol's gain. Okay, so they got a little bit of a downgrade from Citi. So AbbVie stock tumbles on failed schizophrenia drug studies. Okay. AbbVie down over 13%. Oof. So schizophrenia drug did not work out. Okay. We got some pretty good movements in semiconductor areas. Let's go run through that. Okay. So Micron down pretty good. Intel down pretty good as well. Oh man. Okay, there's starting to be a lot of talk here. I'm gonna talk about what could be a decent options play. So, over the past couple of weeks, we've heard more about possibilities of Intel going through a merger and or an acquisition. I would much rather than just say, hey, I'm going to buy calls, because you don't know how high the stock might go on any potential announcement of that. What? Well, that's a bummer. All right. Might have to go to Google Finance. Anyways, if it's serious that there might be a potential serious talks of a merger and or an acquisition for Intel, like someone buying Intel out or something like that, the way I would want to play it is not just straight calls outright. I would want to do a spread. I want to do a bull call spread. And another possible way to do that is actually to do a bull put spread, and we can talk about both of those. Actually, bull put spread might not be all that bad, honestly, because you don't have to worry about how far it goes or anything. You just say, hey, you know what? Cool. If there's merger talks, I don't see this thing dropping off, and I can just sell some put options and collect premium over whatever time frame. So might not be a bad way to go either. The other thing that you could definitely be doing on Intel is just doing the wheel strategy, right? Just do the wheel strategy and be short dated on selling your put options. You wouldn't be worried about your capital drop off, right? Because if there's a lot of rumors about Intel possibly being acquired, you're not worried about capital drop off because somebody's going to buy them out, right? So that's kind of the mindset you'd be in. Good grief. We're going to Google Finance. Google Finance. It's been a while since I've had to do this. I don't even know. You know what? I don't even know if they have options for Intel, but we'll find out. My goodness, it's been a while since I've been to their. It's been a while since I've been to their website, to their website to see how things work. I don't even see options anywhere. Ugh. I don't want to have to bring over the broker. I'm not going to bring over the broker. We can just talk about it tomorrow. Why? Man, they have really dumbed down their website here. Users follow. Yeah, they don't have anything. Stock options. Options and data. Let's see. See if we can get just public. There we go. That'll work. Bar charts. Dude, what is going on with market data today? All right, there we go. Options for Intel. There we go. No way. So if Intel is currently floating around 25, you can definitely do the wheel, which, I mean, the way you'd want to start that out now. You're going to have to make sure you have the capital to cover this. But what you could definitely do is just be selling put options. Now, they're probably going to have weeklies. Yeah, November 15th. So that'd be like this Friday. You could sell the 25 for like 28 cents, 26 cents. Say 25 cents, okay? So you can sell the 25 strike for 25 cents, which, I mean, it's already moved $1. So you could definitely do something like that. I mean, the other thing you could do is you can go further out in time. Maybe go like next Friday. Be about 50 cents. Be about 50 cents there at the 25 strike. So there are a lot of different ways you can definitely say, oh, you know what? I'm going to collect in on said rumors of possible acquisition. And anything that allows you to not have risk to not meeting the like upside targets, right? So like if you go look at calls, and if you were going to play this in the bullish direction with calls, like you're going to want to give yourself plenty of time because you don't know if or when the possibility of a merger would come out. So you're kind of saying, yeah, you know what? I want to make sure I give myself plenty of time. So you're going to be looking out a little bit, maybe like, you know, into the $29, $30 strike area. So then you're looking like the market then needs to get a couple points above these two strikes, roughly, unless you're going like closer. Yeah, you can go closer, definitely. But just remember, whatever your break even, to know your break even, you're going to take the strike price you buy plus whatever the premium is you're going to have to pay for the options. This is going to be very important that you know what your break even is going to be. So like this one would be about 32. This one would be about 31.50. This one would be like 30.50 or so. I'm just taking about the halfway point between the bid-ask spread here. But it's very important to know what your break-even is going to be because, well, if they get acquired, it comes out that they get acquired, and it jumps up to, 31, what's going to wind up happening in the options market is all extrinsic value will get sucked out. So if you buy options out, how far out are these? Oh, May. So like they're May options. So there's a lot of extrinsic value baked into here, right? The time value all the way out to May. So if there's a lot of time value baked in there, if the announcement comes next week that they're going to get acquired for $30 a share, well, all that extrinsic value all the way out to May is going to get sucked dry. Like it'll go almost to zero. There will stay like a few pennies, but it's almost negligible. It's not worth it. So you are looking to say, hey, you know what? I would be willing to say Intel's going to stay at this price level or higher for the foreseeable future up until some possible announcement of acquisition. So I'm going to look to do things that are profitable this area and lower. So if you're selling put options down in this area or lower, I would say if you're selling put options at or around the stock price, you're probably going to be looking fine. You'll be looking okay. The other thing you can do is bull put spreads, right? And what that would be is looking, I wouldn't go super far out. The idea of bull put spreads is to collect the premium. So you want to keep it maybe to a week or two. So maybe like this Friday or next Friday. But what you're going to be doing is you are going to be selling the higher priced strike. So this one, $24.50, and then buying the lower priced strike and collecting the difference, which would be roughly in this case 13 cents in premium. Take roughly the halfway point, but there's only dollar spreads between. So you got 34 cents, 21. So you got roughly 12 or so, 12, 13 cents that you'd be collecting. Is that crazy awesome? No, but since you're going to be able to do that like every week or every 2 weeks until you get to whenever point they get called away, then you're fine. I would rather do the wheel strategy, my opinion, because if you're just selling the premium every week. I would just probably be doing this every week. All strikes. Nope. I want to change it to the near term. November 15th. You could go the current price, around the current price, which it's around 25 there. So you could do it there and collect as much premium as possible, or you can go one less and just say, hey, you know what? I don't want to deal with getting called away. It kind of goes both ways. It just depends on what you want to do. The one thing you're going to want to make sure on the wheel strategy is you want to make sure you have enough capital to take on the shares at whatever strike price, like 25 times 100, right? And that's per contract. So 25 times 100, that'd be $2,500. That would be as much capital as you need to sell one contract, $2,500. So to be able to collect $27 or so for the week, you need to have about $2,500 to be able to front the capital. If you're like, that's not a big deal, but you're able to do that every week, which that is a pretty good rate of return. So that would be what I would do. And I would actually, if you got the capital, you don't mind taking on the shares and then just turn it over. Excuse me there. And then just turn it over and then sell them the covered calls, right? Roughly, if you get put shares, you'd be able to sell the covered calls for like 96, which, that's there's some pretty good premium there on the call side. And the reason why there's probably some pretty good premium on the call side, to be pretty honest, is because they are the rumors of getting bought out. So that's probably a big reason why there is premium kind of baked in here. So if you see that there's a lot of premium kind of baked in here, honestly, there's a lot of premium on the call side. Really what you could do is be kind of aggressive on the put side. Let's go back to puts real quick. So you can be kind of aggressive on the put side. So we know the market's currently trading around 25. So if you want to say, hey, you know what, I want to definitely put the shares so that I can make the bank on the call side, or you can just buy you can really what you could do is you can just buy 100 shares and then sell the calls outright, the covered calls, which might not be a bad idea. I would just rather sell the puts so I can get some premium on any kind of potential pullbacks. But I would be okay doing a buy right. That's what they call it, right? When you buy 100 shares and you sell a covered call immediately, it's called a buy right. And I kind of dig that, honestly, in my opinion. It's not a bad way to go. You'd be able to collect that call premium that we saw, which is like almost 90 cents. And some of this might be some market trading, as we've seen. We've seen some good price drops so far today, but over the past 15 minutes, usually option data on Finance Yahoo is delayed 15 minutes. So usually they'll say it somewhere. So, anyways, those are they don't say it somewhere. Usually, the market data is it's delayed as of right here, about 10 minutes delayed. 10 minutes delayed. So that would be kind of some good scenarios to possibly do, is just to do a buy right. You can do a buy right, or you can just sell put options outright and just say, hey, you know what, I'm willing to take on 100 shares and then just sell. If you get put the shares, you sell the calls. If you don't, then you just turn around and sell more put options. But honestly, either way, you're probably going to be looking to be okay. I wouldn't be worried about Intel dropping off the face of the world just because of any possible mergers and acquisitions. Now, if Intel does wind up dropping, you sold a put and it does wind up dropping, make sure you sell that original strike price that you got put shares, okay? Because if you sell the 25 and this week it winds up dropping down to like 22.50 or 22, well, you only collected, right, 25 cents. So then if you turn around and sell like a 22.50 for like 90 cents, there is a situation where you can come out of this after the shares get called away on the call side, that you come out actually down on the position between getting put shares and having your shares then called away. So, right, because that would be a drop of about $2.50, and you only collected $1.15 or so in premium. So $2.50 on the stock price drop, but you collected $1.15, so that'd be roughly $1.30 loss or something like that. $1.30, 35 loss. So yeah, if you get put shares, just continue to sell the strike price on which you got put shares, and I think you'd be all right. I think it'd probably be a solid way to go. You don't know when the possibility of a merger would happen, but I think premium being pretty historically low, they would probably get someone to come in and buy them out, being down at these prices, and or long-term investors looking to buy up some really good value. Anyways, that's a solid way to go about it. I just kind of was thinking about that as we're very briefly talking about Intel. Anyways, seeing some pretty good bearishness out there in semiconductor world. TSLA getting a nice little pop. Obviously, people are optimistic with Elon Musk being a part of new administration coming in kind of team. Financials are doing pretty good out there. Other than that, Freeport, McMoran, and is that Nucor? Is it Newmont? That's Newmont, not Nucor. Ooh, man, Newmont had a really bad earnings day, down 15%. It has not given. And I had like a really solid bounce at all. And it's gone right through the long terms too, especially today. Wow, jeez. I know that some of this had to do with lithium mining stuff. So I saw some rumblings about that a couple weeks ago, so it probably has a lot to do with it. Anyways, yeah, that's about it as far as the heat map. Yeah, we're just seeing some pretty good selling out of really mostly semiconductor areas. Not to say that other big tech areas aren't getting hit outside of Tesla. They're all down. And Google's holding up pretty well. So, but it might be a quiet day on the markets. It's kind of like a pseudo federal holiday, but it's not a federal holiday. So, a lot of people do take off for it and stuff like that. Anyways, Alpha we'll see what kind of happens the rest of the week, but seeing some pretty good rotation out of tech areas, which over the past week have lagged behind pretty good. So, Alpha have a great rest of your day. Enjoy your Veterans Day. Take care.